We've got just over 5 minutes left of trade, and I'm joined here on the floor by Gordon Charlotte of Rosenblatt Securities. Gordon, that sell-off last week very much in the rear-view mirror at the moment.
No question, Wolf. As we look at it now, we're obviously seeing an oversold condition. Markets have stabilized, VIX has gone down. Clearly, that was technical in nature at this point. But still, you got to be looking out for volatility. We're going to be seeing a lot of earnings coming up here. And I think it'll be the comments accompanying those earnings that are going to be most significant, particularly in those sectors where the elections might have some doubt to the outcome, and then you might see a swing. So I think right through election day, we still have to keep our eyes particularly focused.
You said the rebound technical in nature. Is that true in terms of which stocks and sectors are rebounding as well?
Well, we'll have to see exactly how it all pans out. I mean, what are the effect of the tariffs? What are the effect of these types of extraneous circumstances that don't necessarily show up on the balance sheet that they're going to have to allow for? So we're going to watch, and one of the things that you see in these kind of markets is that they really punish you if you disappoint, and they really get behind you if they like what they hear. So I think we'll see more volatility than we are seeing today.
So tariffs and midterms are factors you're looking at for. What about rates? Because clearly they've come off the highs as well. Has that been something that's allowed this rally to happen?
Well, I think the fact that that's settled down, I think people have sort of taken that out of their focus at the moment. It's really all about earnings right now, Wolf. That's the thing that the traders are keeping an eye on.
Okay, great stuff, Gordon. Thanks very much. We'll let you get back to the close. Right, let's have a look at the S&P 500 intraday. It's a great-looking chart. As you can see, a decent positive open. It's only got better and better throughout the session, and we are right near the session highs as we approach the close. All four of the indices for you. You can see the NASDAQ and the Russell do lead the charge higher. Over 2% of gains for all of those indices and around about 3% for the NASDAQ. Pretty strong performance there. Best day since March. But of course, don't forget those big sell-offs that we had last week on Wednesday and Thursday in particular. Sector performance, again, broad and significant. All four indices. Four sectors up above 2% at this stage, over 3% for technology, and only energy up less than 1%. So broad, big bounce back, but led in general by tech, communication services, healthcare, some of the ones that had suffered most last week. And as I bring in Bob Pisani, we've just got a little half screen of some of the names we've been keeping an eye on that are reporting after the close. The likes of Netflix, CSX, IBM, United, of course, will have all those numbers when they come out, but they have taken part in this rally. You could therefore say, Bob, they're set up to miss if they don't really hit those numbers.
Well, remember, Netflix had that miss last time, and that affected them for sure. So the selling last week is largely exhausted, and there's two ways you can see this. Number one, the volume is much lighter than normal. And we've had a 500-point rally on sub-normal volume. Last week, remember, we had an 800-point sell-off on very, very heavy volume. So last week, for whatever reason, quant funds coming in, selling aggressively, some of them buying treasury bonds were the main factor. Today's rally was on very, very light volume. That tells you the sellers are not there. When the sellers are exhausted, nobody particularly wants to sell, prices go up to attract everybody else, to attract the sellers, and that's why you're getting the rally. The other thing to look at is the VIX. It's collapsed. We were at 28 last week on a Wednesday. We are now at 17 and change, and if you look at the VIX futures, you see how they're all basically, it's all flattened out. Last week, it was 28 on the VIX, and the front month contracts were 20 or 21. This tells you the market has calmed down. So low volume on a big up day and VIX collapsing tells you much of the selling has been exhausted that we saw last week.
Albeit it would be more confidence behind the rally if there was higher volumes. The lower volatility is encouraging.
Under traditional technical analysis, absolutely. Volume is confirmation. If Art Cashy was standing here, he's been saying that to me for 20 years, literally. With that said, the other factors that were important, the JOLTS number, which normally is not a market mover, but record job creation. And then I can't help emphasizing, I know I do it every day, but the earnings growth has been terrific. The companies today, we saw the Dow components, Johnson & Johnson, Goldman Sachs that we saw today, numbers way above expectations, revenues well above expectations. 41 companies have reported so far. 88% are beating, that's higher, and we're getting 25% earnings growth. These are all numbers above the expectations that we've been seeing.
And Bob, that rates outlook, and on top of that, the dollar not looking too scary at the moment.
No, the dollar's calmed down dramatically. You know, we had that big spike up in the dollar a few weeks ago, and the trend in the last few days generally has been flat to down on the dollar. So dollars calmed down, rates have calmed down, largely flat today, right across the yield curve on treasuries. So everything is just essentially calmed down, and you can see that action in the volume and in the VIX.
Also a day where the US has significantly outperformed the rest of the world. Europe was higher, but not as high as the US close is shaping up to be. And Asia was sort of mixed. China was down. The rest of Asia, though, positive, but not as positive as we are looking at here. We've got 20 seconds left to the close. We're up 560 odd points on the Dow, right at the highs, 2.2%.